Good morning, everyone. This is daily trading analysis with the weekly recap for this week, which has been a banger in terms of upside. After more than 1,200 points of downside last week, in which the entire world freaked out, we had the double bottom, we had the extended move to the downside, the capitulation, and then this week has been higher and higher and higher on the back of pretty good economic data. So the first that we are going to see is review the economic data. On Monday, we got the consumer inflation expectations back at 3%, stable, but at 3%, it's not either good or bad, it's just as expected. On Tuesday, we started seeing good numbers. On the PPI, we got less than expected PPI, we got less than expected core PPI month over month, and 2.4 year over year for the core PPI. And the final PPI headline 2.2%, and that sparked the week to the upside instantly because that was ahead of Wednesday's CPI. And on Wednesday, we got the results. If you want the detailed analysis, I'm going to link on the upper right corner the CPI analysis that I did, pretty detailed. But right now, let's just go summary. It was decent, not as good as the PPI on Tuesday, but as you can see, the core PPI was as expected, 0.2. The core CPI year over year 3.2 as expected. Headline inflation month over month as expected. And inflation year, it's down from 3% to 2.9%. I mean, this is mostly good. We were expected the same kind of downward pressure on the PPI for the CPI, but at least we got something. Something interesting also is that the NBA 30-year mortgage is at 6.54, and look at the refinance. It's 889 if we check that number. Look at this. This is extremely good for households that are willing to negotiate lower interest rates. So after the CPI, the best data that we were expecting is retail sales. We are in this equilibrium between fighting inflation and now worrying about recession because the Fed push so much interest rates that is destroying parts of the economy. So the recession fears are increasing. So we were expecting strength in the economy in numbers like retail sales. And look at this number, 1%, we were expecting 0.3%. And also labor market, initial jobless claims and continued jobless claims came a little bit lower than before, not super low, so still cooling down, but supporting enough that the labor market was not a concern. The big number was retail sales. Look at this, 1%. It has not been 1% increase since, let me just look at that because I think it was, yeah, since more than 1 year ago in which we pushed 4%. All this time we've been below 1%. This is a strong number. And the market just ripped higher and higher and higher, grinding. This was the grind day that everyone was expecting. Finally, on Friday, building permits, a little bit worrying this preliminary for July, because look at this, minus 4%, and housing starts month over month minus 6.7%. Both of these are a little bit of concerning, but I think it was quite choppy at the open. But what killed the market on Friday was the Fed Goldsby. Let me just go straight into the charts because this is the weekly chart after this sell-off of 1,300 points last week, we just reaped 1,100 points, almost 1,200. And that was a 5.32 week. We have to go back, really go back to, I don't know when, like October last year. Do you remember when we were bottoming out after this consolidation and then everything started to rip to the upside? That was the week, 6.10%. After that, this week, 5.32 is the best week since then. So obviously it's a big week of big data on the background. On the daily, we can see the big sell-off last week, and then directly Thursday, Friday, okay, start the week, non-news Monday, PPI, CPI, and then the big Thursday and Friday end of the week. Look at this end of the week. One of the things, nuances that didn't happen is that we didn't take entirely this. On the ES, we also didn't take this high. And this is still open, but I think in terms of daily, we have two fair value gaps open here. So if we just wait for a pullback and then push for this reclaim, because this week is quite important. This one here, I was watching the entire week this, because when you had this kind of sell-off, when you have good data, obviously the optimism starts to rise. And the best indicator of, okay, we recover everything, is just to reclaim this level. So that's one of the keys for next week. And let me just show you where are we in terms of volume on the daily, and then we go down to lower time frames, and I'm going to tell you where Fed Goldsby just destroyed the market. So as you can see, big candles, but let's just focus on the volume. From the bottom, we can see that we have way lower now the point of control. This is pretty good. This is in this situation, in this consolidation. So this is bullish. And then from all-time highs, we have basically at the same spot the point of control. We have below us big volume, but look at this. Look at this. This is purple, so it's coming from volume on the bottom. Yellow eats volume from the highs. So we have this volume of the highs, that's the point of control, but right now, at this level, right at the lows of the week, we have a big spike in volume at 19,600. That's the level that basically we couldn't hold on, on Friday. So let me just go to the 1 minute to see, look at the bad luck. This was a trade that I was trying to do. So the overnight was just pushing higher, but when London started, we started to sell off. We broke the trend, we established this pivot, and I was just expecting some kind of liquidity run, even in pre-market lows, and then manipulation move to the upside, because we added 34,000 open interest in the ES and 6,000 on the NQ. That's new business, new longs, because yesterday was such a Thursday was such a grind day to the upside that, I mean, it was crazy open interest. crazy new longs. So as you can see, we took this, and I found my setup, inverted fair value gap, bullish fair value gap, and my target was this equal highs at 640 up here. So we push, I enter in this candle, exactly in this candle, and I put the stop right at that candle because it already tapped the entire candle that made the fair value gap. It wasn't a big displacement that was concerning, and we were below the 45. So as long as we cross this pivot, I was going to put my stop at break even. But it was just like boom, and I lost 5 points. 5 points. But as you can see, I have in here a note right here at 6:44 in the morning. Fed Goldsby, without any notice, said some leading indicators of recession are flashing warning. I mean, why are you saying that at that time? It is what it is. It's super dovish. And then the market just sold off 140 points in the overnight. Then we consolidate, and I was trying to find another entry because I was certain that some of these, and look at these relative equal highs, some of these was going to be reclaimed. But look at this chop at the open. It was choppy. The 5-minute order block was not respected. I mean, I had a lot of stuff prepared, but it was super choppy. Look at this sell-off again, then below the 45. And then suddenly we started to push. And then we took that relative equal highs, and then we took the second relative equal highs. That was my main target. What about pre-market highs? We couldn't do that. Actually, we rejected 660s, and if we put the 1 hour again and we check the volume, look at this big volume. This big volume, let me just put a box because I would like to really trace this. This big volume is from here to here. And let's see. That's the 1 hour. And let's go to the 15. Okay, so looks like we were holding that. Okay, so that's good. I'm going to keep this. This is the volume there. And we also, if we clean, let me just do a quick cleanup of the liquidity that we took. The pivot, trend line, liquidity taken, and then I'm going to leave this because that was quite a one tick, and London Open just flashed everyone. Fed Goldsby, by the way, Fed Goldsby at 10:26 in the night said again, I have I have concerns for 2024. I have concerns that we set this level of interest rate more than 1 year ago, and inflation and the labor market are cooling faster than expected. I think we should take a step back and think about that. Another dovish comment. So Fed Goldsby with his comments, thank you, thanks a lot. It was quite a choppy market on Friday, and I was expecting something different towards the 717 that was the main target to really reclaim all this zone. So basically, Apple was struggling at the end of the day at open. Then we push Microsoft, chop, Tesla, another chop, Amazon, another chop, Google, quite big push, and then consolidation. Nvidia is the one that was trying to reclaim the first gap that we, but look at this big reversal, and Meta was just down almost 2%. So basically, a lot of these were chopping a little bit weak, one or two names, but was mixed sentiment. Banks were doing pretty good, and we are reclaiming. Look at this. This was last week, and then this week. If we change for the weekly, I mean, this is super bullish. So financials are telling you no recession, forget about it, don't worry about it, just buy things. Buy things. And what about small caps? Small caps had also a good week, 3%, but that week in which we freaked out was almost 7%. So we are still a little bit worried about that. On the daily, we can see that we are slowly reclaiming that gap and creating also another one. So let me just do this quick. And the RSP, it's basically, look at this, it's basically jumping with a gap. So that gap is pretty important. Let me just take it, because I would like to track gaps. RSP doesn't usually put a lot of gaps, so I would like to track this here, and then we have that. So pretty awesome move. We are recovering a lot of momentum, as you can see. Trend, we have started to trend. Also 54% of stocks are above the 50-day moving average, but I mean, we need a little bit more than that to really reclaim what happened here. And this is going to be key for a lot of markets. Claim what happened weeks ago, because the entire world sold off, and dollar, it's still struggling. I think dollar it can see a lot more downside. As you can see, this was the CPI, and then we reverted all that move. So dollar is still weak, yields are still weak, 10-year still weak. So yields are under control, inflation is under control. The key to understand right now is recession. Are we going to see recession? As you can see, we rejected pretty hard what happened in the annual version. I'm going to put another one. I think that's better. That's needs to be yellow. So we quickly reverted that for there to, from there to there, we are 0.20. That's insane. 200 points less. It's insane. So basically right now, the recession narrative, it's over. The Fed, one of the Feds, it's saying that we have to be really careful with this inflation stuff. And maybe if we don't cut interest rates in September, we are going to see bad things. And that's putting a lot of concerning things on the market. Let me just remove some of this. This was the gap. We are still on the daily on the 50% retracement. That's pretty substantial. Let me just remove everything here. The order block, I'm gonna leave it. So here we are. Where is the volume? The point of control is going to be key for next week, 19,200. And we have two fair value gaps. We have this one, and oops, We have that one, and we have this one down here. So these two fair value gaps are going to be zone of interest for me. And which one do I want to focus? Fibonacci from the lows to the highs. We can expect a lot of pullback. A lot of pullback. The 50% retracement, it's way below. So I don't think we need this. I mean, if we pull back like this, it might be worth watching. But my first point of interest is going to be this point of control from all-time highs, from the highs, which is at 200s. So I'm going to remove the fib and focus on the volume. The second one, so obviously this first daily, it's going to tell me something. So the 50% there, it's 300s. And then we might expect something like, let's see the pullback. I would not like to see the push or this liquidity that's pending, or even the push for the gap during the overnight and then pull back. If we do that, I mean, the target for the entire week is gone. I have more targets up here, but these are high resistance. These are big numbers. I mean, 20,000. You think we are going to see that during the overnight? I don't think so. So I would prefer a pullback. This pullback, perhaps it's going to fail, but still, I would like to track that. And the next one is going to be down here. And we have an interesting level here. Let's remove this. We have an interesting liquidity down here. We have this week. And then we have the daily fair value gap. So we have two dailies fair value gap, and in the middle, we have the point of control, and then we go below for another point of control from the bottom. So obviously the best in terms of investment is this one, because we go below all this and we bounce from 50% retracement on the Fibonacci with a lot of volume down here. Exactly there, or what? No, it's not there. It's up here, right? Just put it. Yeah, it's up here. It's up here. Let me do it again. So you have there, and we have the other one down here. But the dailies have lower resolution. If we put the 4-hour, goes back again. Put the 1-hour, the higher resolution. Yeah, it's here. You can look at this. On the 4-hour, we don't have that resolution here. So it puts in here that, because there was a lot of accumulation here. But on the 1-hour or lower, we can see that also this was quite a lot. Look at this. In the 19,000s, I mean, in this range, this was the PPI, then the CPI. So I'm going to leave it like this. Let me just see the other one. Yeah, these two. So on the 1-hour, sorry about that, guys, but I'm doing this right now with you. So on the 1-hour, we have these point of controls that I would like to be retested. And if we continue higher, I'm not interested. I want a pullback, because I wanted this pullback, but not that hard. And then we couldn't claim the pre-market. So I want this market to continue lower, take the point of control, retest it, some structure, and then boom. We have both fair value gaps here. the daily fair value gap, and also the point of control. If not, if we fail that, that would be number one. If we fail that, same setup. Fail this, continue lower, and then perhaps taking this liquidity. Oh my God, we are selling off, we are reverting back everything, and then reclaim the fair value gaps. Bouncing from another daily, taking some liquidity, and reclaiming the point of control from the bottom. That would be my number two. The number two, this is way better in terms of risk, because perhaps taking trades up here with this overextension is going to be riskier. But this is my two setups for next week. We have the 30-minute and the 1 hour fair value gaps in here. There's also here, but this order block on the 15-minute, I'm going to leave it because it already jumped from that, and it was quite visual on the grind higher from the CPI. There's another one here, but it's already in the 50% retracement. Okay, let's take it also. There's only two 15 minutes order blocks on Thursday on this grind up. So let's just track those. This aligns with the 50% on the daily, but overall, we are quite extended. We need some kind of pullback to take liquidity if we want to go higher. Our strategy, it's always take volume nodes and take levels of big levels of interest. And big levels of interest are way below our 200s and or even a 19,000. There are some pools of liquidity that might have a lot of stops that we might run and then push higher. There's also the 10% here. I mean, we are already in range for a big recovery. We did a big recovery. We tried. I mean, it was worth this capitulation to really see this recovery. So this is the moment of truth. If we keep squeezing, this is going to be unsustainable, and it's going to be quite hard to really jump in on a trade. Everyone that trades with risk management would like to see a pullback. I would like to see those pullbacks either to the point of control from all-time highs, to the point of control from the bottom, or take one of those daily fair value gaps. That would be great, but be patient. Be patient, because the Fed is starting to send signals of a cut, signals of recession fears, concerns, alerts on recession indicators, things like that. So let's see what happens. And I think that's all from my side. I covered real quick the fundamentals. It was real easy this week to really understand what was happening. The price action was pretty decent, but we just went too high, too fast. The same way as we did last week, we went down too fast, too quick. So I will like better price action for the next week. A little bit of pullback, and then from key levels, start climbing again to reach the final target, which is 20,000 in my books for next week. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this weekly recap every Saturday to review the fundamentals, review the technical analysis, and other markets to find convergences, divergences, try to find levels and setups for next week. And also from Monday through Friday, I upload every single day market forecast, market updates, and market recaps for you to reevaluate your bias during the week and to see what happened in the markets every day. So if you find those interesting, remember to subscribe, support the channel. I do this for me, but also for you. This is my entire thing. And I'm not hiding anything. and I show you my trades, my ideas, my levels. I'm doing everything for me, but at the same time, live right now for you. And this is my chart. This is going to be my chart for next week. So if you are interested in this, welcome to the channel. Remember my mantra: discipline, patience, and risk management are key for success. Stay safe, everyone. Have a nice weekend and see you on Monday.